Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. ASEAN members pursue new economic partnerships with China and the Arab Gulf states during the just concluded summit in Kuala Lumpur. The Labor Department urges companies to adopt work-from-home setups ahead of major gridlock expected from the EDSA bridge repairs. The Sultan of Brunei is hospitalized for tiredness while attending the ASEAN summit in Kuala Lumpur. And former lawmaker and murder suspect Arnolfo Teves Jr. is arrested in Timor Leste. Let's take a look at how global financial markets performed overnight. Wall Street led the gains after a surprise lift in U.S. consumer confidence and a tariff pause from President Donald Trump. Investor sentiment improved sharply after Trump delayed the implementation of his proposed 50% tariff on EU imports until July 9, giving more time for negotiations. Additionally, a 14.4% surge in current month U.S. consumer confidence boosted hopes for resilient spending ahead of the summer season.
Stocks are having a really strong day. Obviously, the big tailwind is the removal of the EU trade overhang that kind of popped up at the end of the previous week. You know, this bull market off of the April 8th lows has really been built on trade de-escalation. You know, first the 90-day pause, then some truces with China. And so the EU spat threatened that a little bit, and the removal of that overhang, the administration's response to the market, I think has people feeling pretty good today.
All three major gauges in the U.S. were up sharply. The Dow Jones Industrial Average higher by 1.8%, the S&P 500 up by 2%, and the Nasdaq sharply higher up by 2.5%. Over in Europe, markets there ended mixed. London's FTSE rose 0.7%, Germany's DAX higher by 0.8%, while France's CAC 40 traded flat with a downward bias. ASEAN member states are deepening economic ties with China and Gulf countries following the just concluded summit in Kuala Lumpur as the region seeks to diversify amid global trade uncertainty. A key focus of the summit, how to navigate disruptions from U.S. trade policies, including fresh tariffs that could weigh on Asian exporters. To counter this, ASEAN leaders backed plans to upgrade existing partnerships like the China-ASEAN Free Trade Area, or CAFTA, while exploring new supply chains and markets in the Middle East. Also held this week, the first ever ASEAN-China Gulf Cooperation Council Summit, seen as a strategic move to expand economic footprints across three of the world's fastest growing regions. For the Philippines, this shift underscores a regional push to reduce dependence on traditional markets and build more resilient, multipolar trade routes amid an increasingly fragmented global economy.
This is a very significant development in terms of economic cooperation between ASEAN and China, particularly during this global uncertainty. And I think this upgrade will provide enormous opportunities for companies and businesses to take advantage of doing business between the two sides.
Here at home, President Bongbong Marcos says his administration can deliver on a key campaign promise, a 20 peso per kilo rice program targeted at the country's most vulnerable sectors. The president dismissed criticism that the program was merely for show, saying it took time to launch because government first needed to support local farmers and boost supply. The program is currently being piloted in the Visayas through the Department of Agriculture, with plans to roll it out nationwide. At this stage, it's available only to indigents, senior citizens, persons with disabilities, and solo parents. The initiative comes amid broader pressure to bring down food costs and could shape public expectations ahead of the 2025 budget talks and future agriculture spending. The Philippine budget deficit widens in the first 4 months of 2025, raising concerns over the country's borrowing needs amid softening revenue growth. Data from the Bureau of Treasury shows that the deficit ballooned to 411.5 billion pesos from 229.9 billion in the same period last year. However, the government posted a budget surplus of 67.3 billion in April, up 57.5 from a year ago, giving temporary fiscal relief. Treasury officials say that the higher deficit was mainly due to government spending outpacing revenue growth, despite stronger April collections. PIDS Senior Research Fellow John Paulo Rivera warns that if this trend continues, the government may need to borrow more, which could pressure interest rates and limit spending flexibility in the second half of the year. The Philippines may soon gain access to the United Arab Emirates' $2.4 trillion sovereign wealth fund through a landmark trade deal called the Comprehensive Economic Partnership Agreement, or CEPA. On the sidelines of the Doing Business in the Philippines Forum in Taguig, Trade Undersecretary Seferino Rodolfo said that once CEPA is signed, the two countries can establish a framework for the UAE to help finance major Philippine infrastructure and investment projects. According to Global SWF, the UAE now manages the world's second largest sovereign wealth fund, trailing only China with assets worth nearly $2.8 trillion. The potential tie-up could bolster the Philippines' drive for foreign infrastructure financing and mark a pivotal shift in strategic capital partnerships beyond traditional sources like the West or China. For the first time in 34 years, Japan has lost its title as the world's largest creditor nation, with Germany now taking the top spot. Germany's net external assets surged to nearly $4 trillion, boosted by strong export performance and a stronger euro. Japan, despite holding a record $3.7 trillion, slipped to second. China ranked third at $3.6 trillion. Japan's finance minister downplayed the ranking drop, noting that Japanese companies continue to increase their overseas investments, a strategy still driving growth in net assets. This shift in global creditor rankings comes amid wider currency movements, trade realignments, and could signal a rebalancing of global capital flows, with possible implications for investment strategy and foreign policy worldwide. Former Negros Oriental Congressman Arnolfo Teves Jr. is arrested in Timor Leste, confirmed Tuesday night through a Facebook post by his son, Axel. Teves stands accused of masterminding the assassination of his political rival, former Governor Roel Degamo, along with 8 others in March of 2023. The Philippine government says it's been ready to extradite Teves since an earlier request was approved, but that process stalled after an unexpected reversal by Timor Leste. Now officials welcome signs of a new stance, either to deport Teves as an undocumented foreigner or to allow extradition. Manila is still waiting for a formal decision, but says it's prepared to take custody of Teves by the most expeditious means once clarity is given. The arrest comes just days after President Marcos's visit to the Asean summit in Kuala Lumpur, where the Philippines backed Timor-Leste's bid for Asean membership. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most, your bottom line. Welcome back. Let's check on how Asian markets are doing this Wednesday morning. The Nikkei 225 is in the green, up by 0.6%. Hong Kong's Hang Seng Index in the green as well, up by 0.2%. And Shanghai's Composite higher by 0.2% as well. Singapore's Straits Times Index is higher by 0.3%. Clearly, the gains in the U.S. overnight, the sharp gains in Wall Street are spilling over here to Asia. Now, let's see how our market is doing. Here at home, the PSE index slipped for a second straight session yesterday, losing 0.1% to close at 63.85. This as thin trading and lingering trade uncertainties kept investors on the sidelines. Analysts say the market remains lackluster amid a dearth of domestic catalysts and uncertainty over global trade policy, particularly after U.S. President Donald Trump delayed a 50% tariff on imports from the European Union. Looking ahead, they say the PSE index may continue to move sideways in the near term, with market participants monitoring key economic data and Fed commentary for direction. Technical support is seen at around 6,300, while there, 6,300. Now at 10:15 this morning, the main gauge is well entrenched in positive territory, up by 1.2% to 64.60, boosted by the gains in Wall Street overnight and the gains all across Asia following Wall Street's gains. The broader all shares index is higher by 0.9% to 37.67. As for the sub indices, all are trading higher except for the mining and oil counter, which is trading to the downside, slightly lower by just 0.2%. So far, volume is at 54 million. Value is at 627 million pesos. Advancers, market breadth is positive. We've got 90 advancers, 29 decliners, while 36 stocks remain unchanged. So it looks like this rally has some legs. Now, at the currency market, the peso opens stronger at 55.50 to the greenback, higher from its previous close of 55.56. Now, the Asean summit in Kuala Lumpur has just wrapped up, with President Marcos backing ASEAN's collective stand not to retaliate against the United States, despite Washington's move to raise tariffs on several trading partners. Instead, the president is calling for dialogue and diplomacy while pushing to strengthen economic ties with Gulf states. Now, back here at home, the Philippine economy is at a turning point, with inflation at a 5-year low and the Bangko Sentral ng Pilipinas now signaling 2 possible rate cuts in the second half. Joining us now to break it all down, from growth forecasts to trade and policy signals, is RCBC's chief economist, Michael Ricafort. Hi, Mike. Nice to have you with us.
Yeah, good morning, Mike, and to your viewers.
Okay. Let's start with the ASEAN summit. They just ended with a decisive decision not to retaliate against the U.S. tariffs. They took a safer, softer, more diplomatic approach. What are the economic upsides and economic downsides to this for the Philippines?
Definitely, Mikey, this is more or less adhering to the internationally accepted and actually generally and universally acceptable standards that would be, well, it's a really matter of containing the tensions and not escalating. We have seen that in China. So when they retaliated, the situations, well, we have seen the escalation of the tariffs, but now it's already behind. They already fixed it. The tariff between US and China sharply reduced from 145% to 30% on US imports of Chinese goods, and the response of China just 10% from 125%. So because that's also the signaling from the Trump administration. It's they prefer better constructive cooperation, trade talks, negotiations, and that's the way to go, because this is a situation now. It's better to deal with it in the highest form of diplomacy as possible.
Yeah, it's a very conducive approach. Okay, Mike, moving forward, let's talk about tariff exposure. At present, Washington's reciprocal tariffs for the Philippine goods is at 17%, which is lower than Malaysia, Indonesia, or Vietnam. Does that lower rate give our exporters a real edge, or do higher power costs, thin margins, are they still the bigger hurdle? What's the big picture here?
Yeah, Mikey, that's still a good sign on the Philippines. But because largely the determination of the reciprocal tariffs by the US, it's really based on the trade deficits of the US with the various countries. So it goes to show that we don't have much trade surplus with the US, meaning they have less trade deficit with us. It's relatively negligible. That's why they only gave us 17, whereas our neighboring countries are much higher, somewhere between 20 to almost 50%. So that's the math and science behind it, that the wider the trade deficit of the US, the bigger the net imports from those countries, the bigger the tariffs have become. Although it's paused now, it has been paused for 90 days since April 9th until July 9 at a baseline of 10%. That's why, as we mentioned a while ago, those who behave, those who don't retaliate with China, they get to enjoy the 10%. China now is given 30%. And now, at least, markets are, surprisingly, the markets reacted positively, because there's, that's a constructive approach being used by the EU. Okay. So they're not really antagonizing the US. And the markets took that positively. That's why US stock markets are, again, near record highs, hefty gains of between 1 to 2%
Yeah,
overnight.
we saw sharp gains overnight. Taking a look at exports as a share of our GDP, Mike, roughly how much of today's GDP is from exports, and how insulated are we just in case trade tensions worsen?
When we look at it, Mikey, the Philippine exports, when it comes to contribution to the economy, and the relative size of this is the merchandise or goods exports. For the Philippines, it's relatively lower compared to more developed ASEAN countries like Thailand, Indonesia, Malaysia, Vietnam. They're like 3 to 5 times higher than us. And the total, yeah, the problem is selling to the US because they have the tariffs there. But for the other countries, not much of a problem. So, and then amid the free trade agreements as well. Now, the total Philippine exports, the the biggest share goes to the US. That's 17%. So there's a need really to diversify away. So that's a similar problem with the other countries. Especially, it's a bigger headache for our neighboring countries because
Correct.
the export-oriented ones. Because where will they sell?
Yeah,
Meaning
it's
they
a
have to think
bigger
a lot.
headache for them. But for us, as we look to diversify to other markets, how urgent is that need given that we still face a 17% tariff and they face steeper duties? How urgent is that need right now to diversify into other markets? And who should we look to first?
Yeah, that's the way to go, Mikey. In fact, over the weekend, there have been talks already for a possible free trade agreement with Canada. It's the next door neighbor of the US. And, we have so many free trade agreements already in place. We're in a free trade environment with the FTA partners for the past 10 to 15 years. You have the US-ASEAN free trade agreement since 2010. We have JPEPA since 2013 with Japan. And practically many countries here in this side of Asia, in the Asia-Pacific region. We have multilateral FTAs, ASEAN, other than ASEAN China, ASEAN Japan, ASEAN South Korea, ASEAN India, ASEAN Australia, New Zealand. So it's really a matter of tapping, well, at least that's the stance, tapping further these free trade agreements, no more tariff whatsoever. And of course, exploring new markets,
Yeah.
bigger markets like in the Middle East. We have seen that during the ASEAN talks, some collaboration, and there have been talks also to come up with additional free trade agreements with other Middle Eastern countries, and also in Europe. Although we have GSP plus there, and many other continents like South America and even Africa. So to complete, it's the irony of it all. The US is the biggest export market of the Philippines, accounting for 17% of the total, and yet we don't have any free trade agreement with them. Maybe this is worth again, to explore. Though realistically, there's so much process involved. It may have to
Yeah.
go through Congress, to the lawmakers, just like what we saw. The latest one that the
Yeah.
country had was with South Korea
Okay.
since late last year.
Mike, you mentioned Japan earlier. I want to get your insights. Germany just overtook Japan as the world's top creditor nation. This is a first in 34 years. I just wanted to get your insights on where you think global money is moving and how this might affect the Philippines in terms of foreign direct investments and trade.
It coincided with the fact, Mikey, that there's been such a shift from the dollar. The dollar's gone down, the lowest in like 2 to 3 years versus major global currencies. We have seen the euro strengthening on a year-to-date basis by almost 10%. We have seen the yen also appreciating by nearly 10%, even the Swiss franc. So away from the US dollar, some sell-off, and even gold appreciated by about 25% year-to-date. So, the appreciation of the euro is among the highest in like 3 years, since February of 2021. It may have to do with that, in terms of valuation. Some ships into it became one of the safer havens away from the dollar. It's just fair because from 2022 till like late last year, we have seen a stronger dollar. The yen coming from 115 in 2022. It was triggered by the Russia-Ukraine war, higher inflation worldwide, and the need to raise interest rates from record levels during the pandemic. So the dollar was strong past 3 years, and now it's the other way around. Inflation has been contained. There's a need to cut rates even before the
Yeah.
Trump factor.
How might
So
that
weaker dollar.
affect the peso-dollar pair, Mike? Right now, the peso is up by 4% year to date. We're hovering at around 55.25. How do you think all these shifts will affect our currency?
But the peso has benefited from that because we came from 51 3 years ago. We reached as high as 59, but that has been respected. That cap there at the 59 for more than 2.5 years, so from September 2022 till the last time we saw it was December 19 of last year. So it's been, we're at 55 levels, 55.60 as of this morning. So 55 is halfway between 51 and 51 low prior to the Russia-Ukraine war and the 59. So, we're just in line with the major ASEAN currencies on a year-to-date basis. We're very much similar. So we're moving as a group. For the past 3 years, when the dollar went up, we joined all together. Now that the dollar is going down, we're moving all together as a basket. So we cannot really veer away from that. And the 55 is the mid. That's a midpoint. We still have remittances this time of the year for tuition payments, and that's one of the peculiar factors supporting the peso. From the point of view of the dollar earners, still a net gain of 4 pesos from 51. Now it's 55.
Okay.
And then from the point of view of the importers, so this is also halfway. Well, it's meeting in somewhere in between. And from 59 now it's 55. We're a net importing country. We're gonna benefit from it. You know what's happening around the world? With a weaker dollar, our trade deficit last year was like $54 billion. So it's gonna make imports cheaper. And for domestically focused companies and conglomerates, I've been very busy past month presenting all of these things to the biggest businesses and industries. With all the trade war, the higher tariffs, that resulted in lower commodity prices. Oil now is among 4-year lows.
Yeah.
It's April of 2021. Even natural gas, coal, even other commodity groups, like even rice. Rice is the lowest in more
Mike,
than 20
taking
years.
a look at our growth story, GDP forecast, all things considered, the IMF pegs Philippine growth to come in at 5.5%, below the government's 6 to 8% target. This is for the full year. What are your house views for Q2 GDP and for full year GDP?
Well, for second quarter, 6% is still possible because of the election-related spending. And at least the easing or benign inflation trend would also help. Other than that, we have seen increased government spending, especially on infrastructure. Employment is still the unemployment rate at 3.9. That's still decent. It's still among the best levels in 20 years since revised records
So
started.
6% for Q2, and what was that for the full year 2025, Mike?
5.5% to 6%. We already reduced
5.5
that.
to 6,
It
okay.
was originally 6 to 6.5 because of the global factors. Now it really depends on Trump. Where will he set the tariffs eventually?
Yeah, and how much of that, Mike, is hinged on expectations of rate cuts in the second half? BSP Governor Eli Remolona Jr. hinted at 2 rate cuts in the second half of the year. Do you think the first, not the first, but the next one will be coming on June 19th when the Monetary Board meets next?
Very much possible, Mikey. Because we have inflation is so benign. It's at 1.4%. It's still possible. Maybe for the next month, for the month of May, it could is somewhere around the 1.2%. So we're below the target, the BSPC inflation target of 2 to 4%. So all the more that further monetary easing in terms of rate cuts is still
How much
very
more, Mike? How much more, Mike, in the second half in terms of rate cuts?
Well, additional 50 basis points.
50.
That's prudent because that's also the signaling from the U.S. Central Bank, from the Fed. They have been consistent with that since December. 50 basis points cut this year, 50
Okay.
basis points cut in
All right.
2026.
One
25
last
basis points cut
question,
in
Mike, because we're kind of
2027.
out of time. In terms of investment rerouting, the midterm elections have just concluded. The cabinet is kind of in flux as they change things up a bit, though the economic cluster is intact. As an economist, and once the dust settles on all of this politics, where would you like to see the government prioritizing their next moves?
Well, it's still on creating that's a role of government, or at least stronger rule of law, institutions of law. Other than that, policies that would further promote economic growth and development in in a more inclusive manner. And, the potentials are there. There are still gaps to be addressed on infrastructure, further speed up many of the infrastructure projects, especially mass transport systems. So enable to boost productivity and attract more FDIs and more foreign tourists. So I'm excited about the subway project because it's going to connect into the airport. But of course, we have to be patient as to because among the gaps like the right of way issues, the permits, the ease of doing business, the cost of doing business, to also attract more foreign direct investment. So it's a matter of coming up with more policies, creating an environment that's more conducive for business to grow, more investments to come, more jobs to be generated, and further boosting the productivity of the economy.
Yeah, absolutely.
Greater education, the biggest equalizer, especially through STEM courses, and technology, also the biggest equalizer, because adopting the best technologies, especially for agriculture, for manufacturing, to further boost productivity and reduce costs, and create more jobs, higher incomes for everybody else. That would also expedite the achievement of the middle income country status of the country.
Absolutely. Mike, thank you so much for your time. That was Mike Rickford, Chief Economist of RCBC.
Thanks so much, Mike, and your viewers. Good morning.
We're taking a short break. Business 360 will be right back. Welcome back. Vista Land and Lifescapes Incorporated reports stronger earnings in the first quarter as demand for housing remains resilient amid easing inflation and steady consumer spending. The property firm's attributable net income climbed to nearly 3 billion pesos in the first quarter, up from 2.84 billion pesos a year ago. Led by Bilyonaryo Manny Villar, Vista Land credits the growth to stronger real estate sales, reflecting continued confidence in the mid-market housing segment. Ayala Land and the Basis Conversion and Development Authority sign a 25-year lease to extend development of the John Hay Techno Hub in Baguio, a deal expected to generate 600 million pesos for the government. The agreement secures over 3,000 jobs and sustains BPO and commercial operations in northern Luzon, strengthening Camp John Hay's position as a strategic economic zone. Since regaining control of the camp earlier this year, BCDA has already drawn over 1.4 billion pesos in new investments through strategic leases, signaling a revival in economic activity and confidence in the region. Meralco is charging ahead with plans to upgrade its grid and expand into renewables after posting record profits last year. From smart meters to solar farms, the power distributor says the next 10 years will be all about technology, resilience, and green energy. Sujin Kim has the details.
2024 was a banner year for Meralco. During its 62nd annual stockholders meeting, the company reported a series of feats. Meralco posted a consolidated core net income of 45.1 billion pesos, the highest in the company's history. Amid extreme heat conditions, the power distributor saw a surge in energy sales.
As energy sales grew 6.4% on the back of higher demand that we served through consistent energization activities. Warmer weather, particularly from the extended El Nino, led to higher consumption that allowed us to continue posting growth even with multiple typhoons that affected our franchise area in the second half of the year.
The company added 250,000 new customers in 2024, bringing its total to 8 million. To ensure system stability during calamities and peak demand, Meralco allocated over 24 billion pesos to expand and modernize its distribution network. The investment resulted in fewer and shorter power interruptions across its coverage areas.
We invested heavily to reinforce and modernize our distribution network, so even when demand surges or when calamity strikes, our system holds strong.
On the digital front, Meralco continues to roll out smart metering technology, targeting 11 million smart meters by 2034. Meralco is also preparing for the wider adoption of solar power and electric vehicles. The Terra Solar Project, the world's largest integrated solar plus battery energy storage facility, is expected to provide clean energy to over 2.4 million households. As of April 2025, construction is 42% complete, with Phase 1 set to begin operations in 2026. Meanwhile, amid discussions on Senator Marcoleta's proposed 12% electricity subsidy, stockholders sought clarification on its potential impact on businesses. Meralco's Chief Finance Officer Betty C. Yap responded.
Senator Marcoleta is looking at a significant reduction in electricity or exemption for the poorest. So certainly removing 10% from the total bill will have impact on both the household and certain businesses. For the household, the impact will be lower cost, higher disposable income, among others. For businesses, that would also mean that their costs would be lower, making them more competitive. However, obviously, given all of this, there may be macroeconomic and fiscal impact, right?
Sujin Kim, Bilyonaryo News Channel.
One Rider Party List representative, Rod Rodriguez, is calling for a congressional probe into the No Contact Apprehension Policy, or NCAP, flagging potential regulatory risks for transport operators and logistics firms. In a new resolution, Rodriguez urges a temporary suspension of the policy, pointing to inconsistent enforcement across LGUs and questions over fairness in fines. The policy has drawn criticism from truckers and delivery services who warn that varying local rules undermine transport efficiency, adding costs for businesses moving goods across Metro Manila.
Maganda naman po yung goal nila, maganda yung layunin. But again, implementation po talaga yung problema. So there is no better alternative. But for as long as the implementation is still marred with all of these problems, we would have to urge for its delay. And talagang makita po natin na fair and with respect to due process po yung implementation nito.
The Labor Department is clarifying that there will be no mandatory work-from-home policy for private sector workers amid growing calls to ease traffic in Metro Manila. Labor Secretary Bienvenido Laguesma urged employers to consider flexible work arrangements, noting that remote work remains voluntary under the Telecommuting Act and must be mutually agreed upon by both the employer and the employee. While there is no directive yet from Malacanang, Laguesma says that the Department of Labor will act if the President issues an executive order mandating alternative work schemes. For companies, it's a reminder to revisit workplace policies and urban mobility strategies, with flexibility increasingly seen as a tool to boost productivity and employee retention. Ahead of the rehabilitation of EDSA, the MMDA is now rolling out a new odd-even traffic scheme, sending many Metro Manila motorists into a tailspin. The policy, meant to ease congestion during construction, has left drivers scrambling to understand the rules. Our mobility correspondent, G. Baroga, breaks down the changes and how the commuting public is reacting.
A major traffic experiment is coming to EDSA, and many road users are still unclear on what exactly is about to happen. The MMDA is launching an odd-even traffic scheme next month, citing the need to reduce congestion during road works. But its abrupt rollout, along with frequent revisions, has left the public facing not smoother roads but a tangle of unclear regulations. Originally, the MMDA announced that both the current number coding scheme and the new odd-even rule would apply at the same time. Brunei. A day later, the agency changed course, deciding to suspend coding and implement odd-even exclusively, at least along EDSA. The so-called one-week dry run has now become a full month-long test period, with key details like exemptions still unresolved. One driver said it feels like they are being asked to follow rules that are not even finalized. Even Grab and other ride-hailing drivers, though exempted, are left uncertain.
Natatakot din ako mahuli. Kasi kapag nahuli ako, mapupunta lang doon yung kita ko.
Mas maganda mag-isip pa sila ng iba pa. Kesa yung ad-even na yan.
According to an expert, policies like this shouldn't be made on the fly.
It should really be ironed out in the sense that hindi pwedeng trial and error. We cannot have a trial and error when it comes to policy because these are people's lives, people's time, and people's money when it comes to if you're actually apprehended for something.
Pornelos stresses that number coding was never meant to be a permanent fixture. It was only introduced to ease pressure during elevated expressway construction. But years later, the system remains and congestion has only worsened.
It stayed for the longest time because vehicle traffic got more and more, car sales got more and more. This year it's going to be even more and more. So what do you do, right? So it's a tricky thing with odd even, among other things.
The contrast is striking. While traffic barely moves on EDSA, MMDA decisions appear to be made with unusual speed, often without consulting key stakeholders.
We've been echoing the sentiments of the public for so many years now, but yet somehow we're always excluded from the conversation. Biglang may announcement na.
Deakin also challenges the logic behind exempting electric and hybrid vehicles, pointing out that they occupy just as much road space as traditional cars. He argues this isn't an environmental issue but a congestion problem. As for the return of the no-contact apprehension policy, Deakin believes MMDA should focus on fundamentals first.
And MMDA is not known for technology. They're known for other things, but not technology. But now they want to take charge of this, and the thing is, there are so many gray areas here.
One practical fix he suggests is a better link between LTO records and mobile phones, so drivers can receive real-time alerts about violations, avoiding surprise charges months later.
This will avoid you building up all these infringements and violations that in a year's time when you renew your registration, that you don't get hit with this big bill.
Meanwhile, Pornelos says enforcement must be matched with driver education, proper licensing, and discipline on the road.
It's on the government to consistently enforce. It's on the motoring public to actually follow the rules, follow the lines, respect the pedestrian lanes, respect the bike lanes. That's really the thing here. It's a give and take.
Both experts agree there is no quick solution to Metro Manila's traffic crisis, but they point to proven strategies. Investment in mass transit, particularly trains, as the only real long-term relief.
For some reason, the train projects are kind of delayed and all that. So hopefully they accelerate those. But in the meantime, all they can do is add more buses to busway. And to manage it properly, make sure it runs well.
For BNC Mobility, G. Baroga.
We're taking a quick break. Business 360 will be right back. Welcome back. Brunei's ruler, Sultan Hassanal Bolkiah, is admitted to Kuala Lumpur's National Heart Institute after experiencing fatigue on the sidelines of the Asean summit. Malaysian doctors say the 78-year-old leader will remain under observation for several days. His office has clarified that the Sultan is in stable condition and in good health. The Sultan remains one of Southeast Asia's most powerful leaders, holding multiple key positions, including Prime Minister, Finance Minister, Foreign Affairs, Defense, and Commander of Brunei's Armed Forces. His temporary absence comes as ASEAN navigates heightened global tensions and seeks stronger economic ties beyond the West, including with China and the Gulf region. As ASEAN navigates strategic economic shifts, another member state is charting a new energy future. Indonesia is turning to nuclear power to meet soaring demand and cut its dependence on coal, with plans to launch its first small modular reactor by 2032. The country currently relies on coal for about 2/3 of its electricity. Under President Prabowo Subianto's energy strategy, Indonesia aims to phase out coal in the next 15 years. With limited nuclear infrastructure, Indonesia is seeking international expertise, drawing interest from Russia, China, and Canada. Some analysts have flagged cost and governance risks, but officials say global investors are ready to move ahead. The move underscores a wider regional push to modernize energy systems and may offer lessons for the Philippines as it eyes alternative power sources. Swiss watch exports jumped to $3 billion in April as retailers in the United States rushed to beat new tariffs announced by former President Donald Trump. The United States leads the surge, snapping up over $850 million worth of Swiss timepieces, a 149% spike year on year. Analysts say that the sharp increase reflects advanced shipments, not stronger demand, as Trump signals a second tariff hike if no deal is reached by July 9th. Outside the U.S., Swiss watch exports decline, with shipments to China down 30% and broader Asia also posting weaker figures. Toyota is shifting gears, blending high-octane racing with street-level brand building. Round 2 of the Toyota Gazoo Racing Philippine Cup brought the thrills not just to the track but to everyday drivers, with Toyota executives in the hot seat. Here's our mobility correspondent G. Baroga trackside.
Toyota turned the streets of Bilyonaryo City into a high-octane playground, serving thrill and excitement to all the racers. While accidents are inevitable, safety remained firmly in the driver's seat.
From the last in 2018, Toyota brought back street racing with round 2 of the Toyota Gazoo Racing Philippine Cup. The switch from a controlled racetrack to Bilyonaryo City meant tighter turns, louder roars, and way more risk. But no one expected the biggest drama to come from behind the wheel of Toyota Motor Philippines' very own president. Masando Hashimoto miscalculated a turn, crashed into a barrier, and flipped his car, but walked away without a scratch. A day before the crash, Hashimoto-san shared it was his first time racing on public roads, and it definitely felt different from the usual track at Clark.
Here is a tighter, narrower, more dangerous, but when I hear the voice, shouting voice or scream voice or say the shout of joy, I was so motivated and so happy on the car.
Younger racers agree, it was intense out there.
It's very challenging, especially in overtaking. You really have to make a huge effort to make a pass.
It's more technical since mas maiksi yung road and there are chicanes na medyo alanganin. So I think there's 3 spots lang for overtaking.
Yes, street circuits come with extra risks, but there's no need to worry. According to Toyota exec and Bilyonaryo heir Andy T, they are no strangers to street races and they team up with their partners to make sure everything's up to safety standards.
They have been closely coordinating with us in terms of how to improve the safety of a street circuit, knowing the rarity of having a street circuit in the first place. So we would like to collaborate more with AAP in terms of setting safety standards.
And despite the scorching sun, fans showed up in full force, just what Toyota hoped for in pushing Philippine motorsports forward.
Bringing the action closer to the metro brings in so much more people, and so we are always excited for preparations towards this event because we only expect more people to join, more people to enjoy, more people to become fans.
The next and final round returns to the racetrack, but fret not, Toyota says fans won't have to wait another 7 years for the next epic street showdown. In fact, this could be the start of a bold new chapter for Toyota Gazoo Racing. For BNC Mobility, G. Baroga.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us and keep it here on BNC, the Bilyonaryo News Channel.